There's a 2 p.m. announcement, 2:30 news press conference. So welcome, everybody. It's going to be a great session as always. Gary and I like to tag team things like this, like non-farm payroll, interest rate decisions that we have. So anyway, if you can see my screen, this is the dollar index on the daily chart, and I'm going to go ahead. It's 137. And so for everybody that's able to trade with me with the micro price detector, I just want to let you know right away, I have my workspace set up. If I right click on my chart, go into my settings, this is the micro price detector fixed 10 pip box size. All right. And so the script that I'm going to run, I'll go ahead and just get it set up now. Going into my premium section, go into my MPD, and this is going to be 1.01. So I'll run this on all dollar pairs. This includes Aussie dollar, Euro dollar, pound dollar, New Zealand dollar, dollar CAD, dollar Swiss, and dollar yen. So I had this specifically set up for an MPD account. I want to turn this on so when the trades are active, it shows me. I have my broker platform up as well. So if anything is filled, I'll be able to close everything out very quickly if I want to. And I'm going to do 1 box in and 1 box out with a 10 pip box size. So if you can see my script right now, these are the inputs right here. So a 10 pip box size, 1 brick in, 1 brick out, or 1 box and 1 box if we get confirmation we're trying to buy it as quickly as possible. I'm going to try to grab some dollars here with 50-cent trades, so roughly 50 cents per entry. And if I lose, I will get in with a increased trade size by the same. So if I take trade number 1 at 0.05, my second trade, if I lose, will be 0.10. So it will be increasingly bigger, and I'll take up to 5 losses. I have never done that using this script. I've never taken more than maybe 1 or 2 losses. I do expect this price style to deliver some decent movement. As long as the market is willing to move and it's not crazy noisy, then we will grab some nice pips on this. But the last time I did a 5 pip box size, it was just way too noisy. So I'm going to go with 10, and I'm going to start getting this deployed on my end. So Gary, while I go ahead and get this set up, do you want to grab the screen and start running through some charts?
Absolutely.
Okay.
Well, just for those that have just joined us, just to give them an update, we're going to be looking at the FOMC rate decision today. They're expecting 25 basis point cut. We think that that's definitely going to be the decision today, even though that there has been consensus that the market may be expecting unchanged, but a very small part of the group. Wall Street is screaming cut, 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 so we're expecting rate cut. Now, what we're going to be doing is we're going to be taking a look at the chart, specifically the charts that are traded against the dollar crosses, like pound, euro, Swiss. We can look at Swiss JPY. We'll look at those setups traded against the dollar. Now, Chris is going to be setting up his own setup based on the MPD script, and he's going to be looking to place some trades as the market takes place, or at least the rate decision takes place at 2 p.m. Eastern Standard Time. So with that being said, welcome to the session today. Chris and I are going to go ahead and chop it out today. This is what we're expecting in the dollar index. Now, just a quick update. Once we go ahead and get the update on the dollar index, I'm going to look at the other charts. The dollar index currently right now, like I said, I'm expecting a little bit of a bearish move towards this wave 4 support down here. Once we hit the wave support, I'm expecting the market to go back up north. Now, this is the daily time frame. This is a daily time frame, so clearly, traders, that this sort of bearish move right here could mean 100 to 150 pips, maybe even 200 pips on a currency pair that's traded against the dollar. So let's go ahead and take a look at a cross that is traded against the dollar, and I'm going to go to, I'm going to start right here at the top, look for any dollar crosses right here. Here we have Aussie US dollar right here. And I'm going to go ahead and actually take a look at the way the market's set up based off, and we spoke about this in our session. We've just looked at what we call the SSL, which is the sentiment strength line, and we noticed on the 8-hour time frame that we've already got a bearish signal right here that's confirming that price is going to start working its way back down. Now, because I trade market cycles, because I love trading market cycles, we have to look at this and say that this cycle that we're seeing right here is just a correction move before the market moves back up. Now, I wouldn't be surprised if today, if they cut the rates 25 basis points and the market goes ahead and creates a flip-flop. What is a flip-flop? A flip-flop is where we have this bearish candle, and then suddenly we have this bearish line, and suddenly we have a bullish line going back up north. That's a flip-flop. And I wouldn't be surprised if we have that with the 25 basis cut today. We'll take a look and see how the markets react. But I'm not going to discount that, yes, the market may be expecting on the Aussie US dollar a little bit of a bearish move. Now, that means dollar strength, right? If Aussie US dollar goes south, we're looking for a bit of strength in the dollar. Now, if the strength in the dollar pulls it back, I don't think we can go below that level. And that level is around about, 0.6810. And then bounce off that and start going back up again, because we're chasing after around about 69.30. So 0.6930. That's what I'm thinking on the Aussie. Now, let's go ahead and flip over to another pair. And I'm going to go to Euro US dollar right here. And I'm looking at Euro US dollar right here, very similar, but in the opposite direction. Look at the Euro US dollar. We're actually seeing that there's a possibility that price is moving out of this bearish run right here and looking to go bullish. What does that mean? That means euro strengthening against the dollar. Dollar's weakening. That's what we're looking for today. Looking for a weak dollar. Now, we haven't got a confirmation yet that the bulls are in control of this chart yet, but the chances are that this could perhaps take place, because if I go now to a daily time frame, and I look at the daily time frame right here, you can see that we're wedged up, right? We're wedged up, but we're right here at the bottom of the wedge. So we're expecting Euro US dollar to actually start rallying up to the top here to get up to around about 112.21 to hit resistance, and at that point we're looking actually for breakout. So if we look at that chart tells us, yes, we're absolutely thinking about dollar weakness on this. Now, traders, all I'm doing right now is I'm just giving you a breakdown of exactly what we're anticipating to happen today. And that's the movement that we're looking at right now does once again confirm that, let's say, 70% chance that the rate's going to be cut and we're going to see a weak dollar. I could be wrong, but we're going to take a look and see what happens today. Now, let's go ahead and take a look at the, and I'm going to go ahead and go to the pound. I know there's a lot of buyers in the pound right now, but let's take a look and see the pound right here. Now, the pound daily time frame has confirmed that, yes, we're bullish. But unfortunately, check this out. We've got a pattern right here. This pattern's showing us that we have it looks like a 95% X crab pattern, which is a bearish pattern, which means that price could pull down. Then we could see the market pull back up again. Now, because I love swings, when I see this type of pattern, I then go back down to a smaller time frame, and I break it down on the smaller time frame. This is the 1 hour. And on the 1 hour right here, I still see that there is still some movement to the upside. Even though we've got that pattern on the daily, we still see that there is some price movement that could take us up to, or at least some momentum to the upside, that could take us up to around about 126. At 126, we could see some resistance. Now, we've got this little wedge here, and we could see a breakout of the wedge to that level before we see some sort of retracement. Again, this is indicating that the bulls are in control of the pound US dollar, and that the dollar is actually going to be weakening today in order for us to be able to see that rally on this pair. Again, going to the New Zealand US dollar. Again, if you look at every single pair that we looked at so far, we've got at least a 90 or 80% chance that these charts are telling us that dollar weakness is taking place today. I like to go to the 8 hour on this. Now, the 8 hour on this has showed us that traders, we see that the market's in the sell-off, right? But if I go ahead and draw in my smart waves here, and I'll look at where we're at right here, although we haven't got a confirmation of the bulls yet controlling this market, it's going to take place. Now, this could be in today's trading. We could have today's trading that could create an opportunity for us to actually go ahead and trade it at the close of the session today, which is at 5 o'clock. So we could see some great trading opportunities this afternoon at the close of today, stating that, and that's again, if we get dollar weakness, then we'll see New Zealand, US dollar starting to rally back up again. And then by the end of today, it's going to be buy all day long, going through into Friday and into the week next week. Let's go ahead and take a look and see what else we've got going here. And I'm going to look at the US dollar CAD. And we've got, all right, we've still got 15 minutes left. I was actually thinking that we had less time. We've got 15 minutes left, Chris. So we got this right here. This is US dollar CAD. Now, US dollar CAD's been rallying, and we all know with the strikes out in Saudi Arabia, we have had, with the oil strikes there, we've had a very bullish move on the on US oil at the start of the week, right? US oil rallied up, but then I sent out a video this week. I don't know if you've seen that, but the video I sent out said, listen, I think this is a fake out. I think this is just a reaction to the market because it fits according to our technical analysis. And we're expecting US oil to actually start weakening. I've even forecast $42 a barrel over the next few weeks, months to come. So the thing here is, with the US dollar CAD, this rally that we're seeing over here, this could be just temporary, giving us a nice little setup, and this is what I'm going to be waiting for. I'm going to be waiting for this right here to go ahead and set up with a trading opportunity to go ahead and sell the market short. So I don't have my confirmation yet. I do know that I'm waiting for a confirmation. I'm looking for the market to go ahead and confirm we're going to sell, get a bearish signal right here, and then I'm selling all the way down, and we could be heading on the US dollar CAD. We could be heading towards a target. And let's go ahead and kill this one right here. And I'm going to head for a target down here at around about, let's see here, we've got 130. So we're looking for a price move towards that level right here, which is priced at 1.30. That's what I'm looking at on the US dollar, Canadian dollar. Again, if that's the case, then you might say to me, well, Epic Big Dog, what, are you kidding me? Are you telling me that if dollar weakens, that means CAD strengthening, right? But in this case now, this may not be due to the fact that we're getting strong Canadian dollar or weak Canadian dollar. This is actually due to the fact that we're going to get a weak US dollar. Now, again, I don't have confirmation yet to start selling this pair. So it's not time to go ahead and say, let's sell, sell, sell. But it is time to go ahead and say, hey, listen here. It's setting up. Patterns are there. Now we're just waiting for the opportunity. And maybe by the end of today, 5 o'clock, when the markets close out, we may have an opportunity that we can start selling on Friday. And into the next week, we'll be selling on US dollars Canadian. We'll have to wait and see what happens to the market. Chris, how are you doing?
I'm doing fine. I'm just I'm looking at the dollar CAD as well, and this is kind of some structure that I was watching for. If we don't have the confirmation, I mean, you're looking for the pretty much the immediate bearishness on the dollar CAD. If this is going to confirm for us, then I agree that we're going down towards 3,000. I love that level, especially back to these lows. I'm just connecting the highs here from back in December to the recent lows, back again in May, down to the lows, back again to current price. I mean, it could be a toss-up trade. I have actually been pretty perplexed on the dollar CAD for the most part, just because oil is choppy, dollar index is choppy, and it's kind of tough to get a winning hand on one of those two, for the dollar CAD to get a direction.
Right, and as I'm looking at your chart right here, this is the you've got dollar, and this is the dollar. This is dollar CAD. And what time frame is that? Is that the 8 hour?
This is the 8 hour. Yeah, I'm just using the sentiment strength line.
Okay, using the sentiment strength line. Right. So if we look at the chart right there, what we're looking for right now is confirmation. We're waiting for confirmation for the market to go ahead and confirm that it's bearish. Now I want to go ahead and flip over to the chart that I've got here, Chris, and I want to show you here on my weekly time frame. I'm going to go to the weekly first, so you can see. And I've moved this up. Let me go ahead and pull that back up. All right. So I'm going to drag this to the left here. All right, and let's go ahead and drag this to, let's grab this here, and I want to see if this can be moved over there. Yep, I can. All right, fantastic. So this is what I'm looking for right here. I'm looking for price to once again, and let me go compress a little bit, once again break this level. I'm going to delete these lines. I don't know why these lines keep popping up right here, but it doesn't want to delete. Oh, there it is. Okay, good. All right, so we've got the market trading now below that level. So this is what I'm looking at right here. I'm looking at price that's traded against this level right here. This is key for me right there. If price continues to hold there, then we could push up a little bit higher to 138. I don't think with the US dollar being weak that we could push up that far up. But I'm looking at this wedge right now, because we trade below the wedge. If price continues to drop down here, there's a long ways down before it can go ahead and start finding real support down there at 120. But we've got temporary support down here at these different levels at 128, 125, and then maybe we're around about 123. We've got support coming off those levels there. So we're definitely going to, well, let's put it this way. We're definitely in a place where we should start seeing something start to break out. I know you spoke about it early on, Chris. when we're going to start seeing these moves starting to take place, and we should start seeing some real directional bias that is not just driven by fundamentals, but it's driven by actual technical analysis. Because a lot of the stuff that we've had over the last few months, and you can contest to that, is that it's been driven by trade tensions. We've had trade tensions. We've had Brexit. We've had these strikes, the oil strikes. All of the stuff has been moving the markets and driving in a direction, and it's been very unpredictable moves, right? Because of the immediate effect in the markets, right? It hasn't been like something that's been ongoing that eventually it's starting to set up nice trending moves. It's just been strong breakouts in a direction. And I know traders have been making great money, but those traders that are not in the right direction, they've been taking some beating. But we've recovered most of the time on most of the pairs with those news breakouts. We've seen a lot of the news breakouts, but the market's recovered itself. Probably over the last month, we've seen a good recovery from those moves. But if we go back to the dollar right here, dollar index, and we look at the weekly chart on the dollar index here, we can see that there is it again right there. We can see that price is definitely looking to come back down to the support level right about here. And if we can hold at the support level, it's going to come back up to retest. Now, I do see these little tops right here, which indicates that maybe we've got some strong resistance here. So that's why I'm saying if we do break out below that level, I'm not going to be too unhappy, all right? Because you can see how far the market's going to come back to get to this level. We've got a long ways to go to get to this level right here. And so if it breaks out of the support down here at this trend line, then we are going to be heading south, and it's going to do something like this as it starts dipping down towards that level right there. Are you seeing that on your chart?
I am, yeah. Yeah, I'm just trying to verify with some traders here. Yeah, I'm just going to double check that everything is good on my feed. So I want to double check the script really quickly. Yeah, I totally agree with the dollar index. I mean, what's just one more note. I mean, you notice that we have this high right here, this high right here. If price, comes down briefly this afternoon, and then ends up forming a low and going up for one more push, there is a ton of divergence, meaning that price and momentum disagree with that high. So again, don't be surprised if we don't break into the open space, which is what Gary was just talking about. The open space would be right here, right? If we break bearish, then we're coming all the way back down to this level at the base of this wedge. There's also a yearly pivot sitting right there at 12,032. So it will give us confirmation, number one, and we'll have plenty of time to trade this. We just have to be getting confirmation, and we can deploy systems and all of a sudden see some breakouts. But if it just bounces where we have previous resistance, that becomes short-term support today. We go one more push higher, and that plays right into also, this pattern, and we're still going to see the same end result. I mean, that's the plan, is we're still looking at this area or this area for a reasonable downward move in the dollar. So, I mean, if we have the same conversation 12 months from now, we're probably going to be seeing the dollar down here or down here. All right. But because we're dealing with so much consolidation, it's just, I mean, believe me, I'd say more than patient waiting for the dollar. And I mean, it's not a matter of how it's going to happen. It's just a matter of when. I mean, I think today is a good example of what a major driving force will be. The catalyst will be the Fed. The catalyst will be whatever. There's always going to be some reason, some WHY reason that the dollar is moving, or any currency pair is moving for that matter. But from the technical standpoint, especially on a larger time frame, it helps us to make sure that we're plotting on the larger time frames. So
yeah, and I think Chris, is also important to also acknowledge that yes, there could be a choppy day today, and maybe because a lot of the price that we've seen over the last few days may have been priced in already due to the expected rate cut. And so a lot of the stuff that I've looked at, right, the different charts that I've looked at, euro, pound, New Zealand dollar, all those setups are actually telling us that the market may be at a top right now or a bottom, and that we have to still wait. So today might just be the deciding factor that we need in order to get the market settling into some sort of reversal trend confirmation, maybe just a retracement move that we need to confirm a trend. And once that happens, once that market sets up, just like we saw here on the specifically on the New Zealand US dollar right here. This one right here, and I believe it was this one on the 8-hour. Yep, this is it right here. So this is a key. I mean, these are the things that I'm looking for at the moment right now. As I'm moving to the weekend on Friday and moving into Sunday and Monday next week, what's going to be really crucial for me is what this data does, all right, to the market and how it sets up opportunities for us. And I'm okay standing aside right now. I know Chris is setting up some trades that we're going to start putting some scalping trades in now as the news comes out. But keep in mind that traders, that's scalping. That's quickly in and out of the market, grab as much pips as you can. But the real big pip grabber will be once we get the confirmation of the reversals. If the market confirms that we actually have our reversal in place, then we're looking at, I mean, check this out. We're looking at around about, in this case now, 200 pips on just this pair alone. Now, this is just on the one move, right? We've got just the one wave from wave 2 to wave 3. We've got about a 200 pip rally on that. So that's where you're going to be able to grab your pips. And the nice thing about this, if we get our trend confirmation, we're going to be able to place very tight stops. You'll be looking at maybe a 50 pip stop for a 200 pip grab. What does that mean? That means you're risking $100 to grab $400 on the trade. Those are the type of setups that you're looking for. And the most important thing right now, traders, is confirmation. Once we get the confirmation, we can get in and start trading it. Now, if you're using this sort of price charts like I'm using right here, or price type chart that I'm using, then what we're going to do is once we get the confirmation on this time frame, which means once we get the bullish confirmation right here, then what I'm going to go ahead and do is I'm going to go ahead and look at my lower time frame like this the 1 hour. And I'm going to take the 1 hour and I'm going to go ahead and look for a tighter stop loss. And already right here, traders, I don't know if you see it already, but I'm already seeing an earlier entry point right here. And this is coming off over here. Stop loss is tight down here, an earlier entry point to buy long, and you can look at a very tight stop. In fact, if I go ahead and pull it out right here, we're looking at, oh
We
my
have 1 minute,
goodness, take
Gary.
a look. What's that?
We have 1 minute, man. It's almost 2 o'clock.
Oh, we got 1 minute? Okay,
Yep.
well, I'm going to just say, we got about a 17 pip stop on this. 17 pip stop, maybe 20 if you put it a little bit wider. But if you look at that right here, we're looking at potential of, oh, hang on, I'll have to go ahead and compress this. But we're looking at a huge, just scream when it's time. Like, we're looking for a huge move right here. That's going to take us all the way up to the top. We've got 220. So about a 20 pip stop, 25 pip stop for a 220, maybe 230 pip gain on this. This is a huge opportunity right here. I think we're almost there, Chris, right? We're almost there. What time is it now?
It is
2 o'clock.
2 o'clock.
There it is. It's out.
Yep, I'm looking for the reaction here.
All right, let's
So
take a look and
knee-jerk
see.
reaction is downward on the euro dollar. If anybody has the news or the numbers, go ahead and type them in. They cut. Forecast 2%. They cut 25 basis
25
points.
basis point.
Yep. So initial reaction, I'm taking a look at the currency strength chart. We'll have to refresh this at 205, but the initial reaction is dollar strength. More than likely, this is just the straddlers that are getting filled. Everyone that's like, oh, what's the dollar going to do? I'll buy it and sell it. Give me some movement. So we should see some dollar weakness kicking in officially here in the next 5 minutes. So let's see if we get some trades filled on the micro price detector. It's the euro dollar spiked down to 1042. Now it's up to 1058. See if this has enough to keep pushing bullish.
And I'm going to go ahead and flip over to my my screen right here quickly and just take a look at my chart right here. You can see here, this is the New Zealand US dollar. And you can see that there's a little bit of choppiness. I mean, check that out. Although it opened up over here for the hour, so about, yeah, we are bullish, a little bit bullish right now on the dollar. Sorry, on the New Zealand dollar, which means that it's not a big move. And again, I don't think I expected a big move. I think it's going to come back to the, let's take a look right here. We've got the FOMC press conference taking place at 2:30 today. So that's going to be where a lot of traders really going to go ahead and focus in on, because what's going to happen is they're going to go ahead and figure out or get some sort of hint as to whether or not the Feds are going to go ahead and raise the rates again this year. And I know it's been already sort of like accepted that there will be another rate cut this year. But the question here is, in the press conference, will that change? Because I said to you earlier on that the 10-year Treasury has at the moment right now shown a little bit of an upside move, which is indicating that maybe the Feds don't have to do as much aggressive easing on the rate and may need to go ahead and just sit back a little bit. They've done the 25 basis point cut. That's been done. Whether they're going to cut again, I don't think that's going to happen if the 10-year yield is going to continue to push it back up again. And we'll keep an eye on the Treasury and see if that is the case. But we can see right now, this is what's happening right now. How's the trades doing, Chris, on your end?
I am long dollar CAD and short pound dollar according to my script. So it's in right now in a couple of trades. So I have two of the, I've got it deployed on all 7 currency pairs. That's the dollar basket. So I'll look and see if any of them roll in. And if they change colors, they'll stop out. So we'll see if the direction is smooth enough to get some entries. So like I said, dollar CAD was filled on my end, pound dollar filled on my end. I'll just keep an eye on these for right now. And if any of these come in, I'll communicate it.
All right, I'm actually seeing a bullish move right here on the dollar. So it's actually going a little bit bullish. Could this be just a fake out? Let's just take a look and see. This is the dollar index chart right here. And on the dollar index chart, you can see that there is some movement to the upside right here. Will it hold? We'll have to wait and see. There it is there. So it started off here, did spike up a little higher. This is a 1-hour chart. So this opened up exactly at 2 p.m. Eastern Standard Time. We're seeing a little spike up right here. We're not sure if that's going to maintain itself. I'm actually at the same time going to go ahead and check out the trades that I have currently right now. And see if any changes. Just a little spike here and there. No major changes to the market setup.
Yep, and I'm looking at the stock market right now as well, Gary, and there's just a big whipsaw at 2 o'clock. We have a huge candle on the S&P, 299 to 300. I mean, I guess it's only about $1.50 on the S&P or the SPY, but just a major indecision candle. And again, we still have press conference at 2:30, so I'm sure what this might end up looking like is, as you know, as you're watching Gary's chart, or if I go to any of my charts on the 1 hour, what we might want to consider doing is watching for this. I'm just going to change this over to a 1 hour chart. A lot of times what these FOMC announcements look like at the end of the day is we have a 2 o'clock to 3 o'clock candle that doesn't really give us a lot of decision. So if it stays like this, you know, this is essentially the stay out zone. And what we'll be looking to do, if you want to trade this and scalp this, you look for a breakout and a continuation up, or you look for a breakout and a continuation down. You just trade the breakout. I mean, there's a lot of noise, there's a lot of news, there's a lot of volume that the market's digesting. There's a lot of back and forth going on right now. Essentially, it looks like everything's at a standstill because we're fighting. Okay, but if we see a pretty clear indecision candle, then set a chart alarm at this high, set a chart alarm at this low, and see what closes higher, see what closes lower, and then you trade that breakout. You know, and again, I always tell traders to look left. So if you're going to take a trade based on that indecision candle, that's what we see here for the next 45 minutes. Then if you're going to take a breakout, look left. That would be a profit target for the bears. If you're going to trade, look left. That would be a profit target for the bulls. And this is the indecision that we're dealing with right now. So there's room to the downside. There's room to the upside. Okay. Those are some safe levels. That's just trading the news. So that's after, you know, after the dust settles here, maybe in the next 25 minutes, maybe we have a new resurfacing of volatility once Powell starts to talk or drop some headlines into the news, and see what the market wants to do as far as digesting and pushing price around. But you know, FOMC is traditionally, in my opinion, a very noisy announcement. There's a lot. I mean, it's considered the dead zone #1. There's a lot of fights going on. There's a lot of news straddlers out there because it's supposed to be a big announcement. So what happens is price goes up, price goes down, and then it just kind of settles and works its way out later on. So I don't know about you, Gary, but I don't see a lot of, you know, just big knee-jerk reactions on FOMC, at least not recently. The last time I can remember, you know, trading FOMC with just a ridiculous move was Bernanke back in like 2014 or 15. I don't know when it was, but he was notorious for getting some movement. He was like the Draghi of the U.S. Central Bank, if that makes any sense.
Yeah, it's not happening at the moment right now. If you look at the charts, it's just pretty much just like you said, a knee-jerk reaction on the news right here. A little bit of movement down here, but I call them stop hunters, or even just a little correction move on this small wave here, but nothing huge to go and get too fancy on. If I take a look at that trade that we spoke about earlier on, it would be something like this. On the pound US, we looked at the New Zealand US dollar, but this is the pound US dollar right here. And the market did pull back just around about short of the 618 retracement, and it's pulled back up quite a bit since then. We could, if this continues to do what it's doing right here, we could end up going ahead and taking out those highs, trade up above it, and chase all the way up here to the top at 125.28. Do you have something buying at the moment right now on the pound US dollar with that system of yours, the MPD?
Nope, my system's actually short for right now, but we haven't see if you look at my micro price detector here, because they're 10 pip boxes. In order for this to change colors, this would have to be, this box represents 10 pips. I need to see another 10 pips to the upside, so that would be a 20 pip move off the low, and that would be a trend line break. If this turns green, then this trade is closed for a loss, and then it turns into a buy. So I don't have a buy going right now, and not yet. This has to actually confirm a green box, and then once it does that, then it'll buy. But right now, I am short pound dollar and long dollar CAD.
I would think based on the news and based on what's come out right here, that I would be a big buyer right now once we get a change of confirmation of the trend.
Sure.
Now I know that I go to the 8 hour, and the 8 hour is going to be a lot longer process, all right? But if I look at the 8 hour and I pull up the 8 hour right here, 8 hour tells me that we're still bullish. Although we hit this third wave right here and we're looking for some sort of correction, it still tells me we're slightly bullish around about 125.67. So we've still got a bit of upside momentum. Nothing's confirmed bearish yet. So the bulls are still in control of the pound, which means that weaker US dollar. If I go to the other pairs, don't have a confirmation yet. Maybe by tonight, like I said, traders, tonight we may have a different setup. If we look at the New Zealand, look at my chart right here. This is the New Zealand US dollar. We don't have a confirmation yet. No confirmation be confirmed yet on this particular setup right here. Tonight, maybe a little different. Maybe a little different. Going back to the pound US dollar right here, let's take a look and see. And pound US dollar, no bearish confirmation. Like I said there earlier on, no bearish confirmation yet. Although I am looking for a dip. Now we got some news coming out tomorrow. We've got the rate decision out in the UK. They are expecting to keep the rates unchanged at 0.75%. So is that going to create a bit of weakness? Well, we did have the CPI that came out this week, and that came out at 1.7%. They were expecting 1.8%, but it came back lower at 1.7%. Now, if you look at all of the data, we did that. We haven't seen a rate change. We haven't seen a rate change in the UK for about, I think. Oh man, I'll have to go back and see.
I can look at it right now, Gary.
I'm actually going to do that too. Now I'm curious because I did remember about a year ago, but let me see here.
The last time we saw a rate, June 2018 was the rate hike.
2018, exactly a year ago. So 2018, in June 2018 was the last time they raised the rates up. Actually, they raised it up in August to 0.75%. Now, what's interesting about this, Chris, is that if you look at the rate cut, the rate hike in August 2018, it was due to the fact. Look at inflation. If I go to the inflation report right here, and I take a look at when they rose. When the inflation was up at like 2.7%, check this out. So August in 2018, they raised the rates. In August, we were at 2.5% in inflation. So they had to do something. Mm-hmm. And then they spiked up to 2.7%. They didn't do anything. And then you saw the inflation rate started to drop from 2.7% down to 1.8% right here. And then eventually now it's at 1.7%. So this is definitely declining. So which means that the inflation, spending is starting to slow down, inflation is starting to decrease. They're in a very huge pickle right now. And the problem they have is if inflation moves away from the 2% mark, what does the central banks have to do? They have to start raising rates, right? But they're not in a position with the global recession that we're in, or heading towards a global recession, or at least a slowdown. central banks aren't looking to raise rates, they're looking to actually drop the rates and cut them to stay away from the economy going into recession. So they're trying to avoid that, and I think the rate cut today that we had with the Fed today, and it's been said that it's almost like a precautionary measure, right? Trying to make sure that they stay out of that recession or possibly going into recession. They're trying to make sure that they're protecting the U.S. economy from going into recession. And so we've got trade tensions, we've got the oil issues, all of this right now that's creating a lot of pressure on the Feds to try and control and trying to make sure that they react before we have any sort of recession coming into play. So if you look at the way that the central banks have been moving the interest rates according to inflation, you can almost think that this week, Chris, I don't know, you can comment on this too, but I'm thinking this week, tomorrow, when they have the rate decision, it's going to be a tough one for them to go ahead and play out.
Yeah, I agree. I'm looking at some real-time news right now, and keep in mind we also have some news out of New Zealand tonight. We have the quarterly GDP, and we also have Aussie employment tonight. So we have two. I mean, those are two particular pairs I'm looking at. I would like to buy Aussie dollar and stay long. I actually closed out just shy of 6,900 on some nice trades this week, or I think it was either going into last week or starting this week. And I'm looking to reload at the bottoms. And New Zealand dollar, same thing. I took a position around 63.50. I'm looking to get back in around 62 or some lows. So, I mean, I'm looking directionally to have Aussie dollar and New Zealand dollar go bullish. But as Gary showed there with that sentiment strength line, I mean, if you see confirmation, it's easier to trade. If we're looking at just this steady raise in the dollar, even though they just cut rates, I think this is also what's going to be interesting is, are we going to see a tweet later on today? We probably won't because they cut rates. So it's like, well, hey, the Fed cut rates. That's a market's reaction. But anyway, it's just, it's not exactly doing what the market, what technically we expect it to do. It is still behaving fundamentally, I suppose. So, but I'm looking here, Fed approves a 1/4 point rate cut, but is divided on further action this year. So let's see here. I'm just gonna pop up this article really quickly. So this is coming from CNBC. Much anticipated 1/4 point interest rate cut Wednesday, but offered few indications that further reductions are ahead. We'll hear more from Jerome Powell in the next 15 minutes, but we had a feeling that was going to be the case. Is everything moving forward would probably be vague. It would probably be data driven, and everything about jobs reports and labor markets and spending and blah, 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 blah. Everything that's data driven. That's what's supposed to be guiding the Fed. I mean, there's probably pressure on the Fed. If other central banks are going to cut between now and December, there's probably another 1/4% or another, roughly 1/4% or 25 basis points that the Fed would consider cutting. But I mean, that's 2 cuts for the year. And will they have a third? I think everything's going to be dependent on, if you take a look at the stock market and we're seeing just a big drop, then the Fed's probably going to cut rates. And I don't know if that's enough to slow it. Maybe not. Maybe the Fed's going to be too little too late if everything starts to topple over. But I don't know, man. I mean, it just seems like a house of cards right now. I mean, I look at the big picture on the SPY and where we could be in 6 months or 12 months, or where everything could fall in the 2020 election. So, I mean, maybe the best thing to do is just put blinders on and just take trades and scalp and just protect whatever you can, and trade elsewhere. Trade non-dollar pairs, trade something else. So, or scalp the dollar. I mean, that seems to be the case right now, which is back and forth. So on that note, I'll bring up the euro dollar. Gary, I wanted to get your thoughts on this one really quickly. So here's New Zealand dollar,
Sure.
Heading a little bit lower. I want to show you the euro dollar and thoughts on this one. So I am looking to, I put in a pending buy on the euro dollar back down to the Draghi low. This was the ECB last week. So traders that were with me during ECB, we made some pips on the way down, and those that held on to it made a ton of pips on the way up. But here we are giving it all back. So I do have a pending buy back at this low. And if we look at the slightly higher time frame here, I'll go to the daily chart. Let me see if I'm in any other trades. Oh, the SPY is dropping aggressively, man. We are down almost 1/4% now in the SPY. So the candle's gotten pretty large to the downside. The SPY is, your stock market. So let's see in the next, let's go to 215 update here for the currency strength chart. Dollar strength. This is Aussie, New Zealand weakness. This is Swiss and JPY. So look at JPY is getting stronger. That's a little bit of risk off, but your dollar is still firm on the day. So of all things, the dollar stayed firm on the day and has continued to stay firm. Can't say it makes a lot of sense, but doesn't really matter, I guess. So, but Aussie New Zealand is pushing a little bit lower for right now. We have news coming out of there tonight. I was looking at this dollar index and the euro dollar right here. If this level fills, I'm watching for this. Something like that. I mean, this goes a lot further, by the way. I mean, we have just a ton of support. If we do come down and score a point with this low, I'm going to scalp that. I'm going to scalp that to the upside. If we somehow get a break of the structure, this is just like Gary was talking about with the dollar index. If we break the lows on the dollar index, that is the equivalent of breaking this trend line and breaking into highs on the euro dollar. But you can just see that that confirmation is just not there yet. So what do you think, Gary?
Dude, let me tell you something right now. And I think it's important for everyone to know. Listen, I don't particularly like jumping in on new supports like this and just jumping in and reacting on it. And the reason behind that is because sometimes it becomes so choppy, right? There's so much stuff that gets put into the news that it gets sometimes choppy, and then you have a lot of fake breakouts, right? And traders try to get into that trade and try and trade it. But I see these trading opportunities, I see these news events that's happening right now as an opportunity to get in. Now, I just spoke about it, how I'm expecting dollar to weaken, right? I said, no, dollar's going to weaken, no doubt about it. Technicals are telling me this. Listen here, the only thing that we have to do as traders is we have to wait on confirmation. What we think and what we perceive as the market going to be bullish or bearish, we have to wait first for confirmation. And if you look at the charts, if you go back to the charts right here and going back to specifically the New Zealand US dollar right here, because I said, man, this is a great opportunity. Let's go ahead and buy this thing. But you know what's happening right now? I'm waiting, and I'm still waiting. I don't have, the one thing that I said, I don't have confirmation. Now, if the market's going to move back, as long as it's not taking out this low right here, right? As long as it's not going to take out that low right here, I'm going to look still for a bullish confirmation. I'm still anticipating the market to be bullish because traders, at the end of the day, if you go back to the dollar index that we spoke about earlier on, and I spoke about how we're in this range on the daily, and I said that I'm expecting the market to still go back down to this level, down this support here. Keep in mind, this is the daily. And so we can have the market doing something like this and then drop back down to that level. So we can have some bullish movement, bearish movement, and then eventually get down to the support. So I'm still expecting price to move down here on the dollar index. So coming back to what you're saying, Chris, yeah, I still think, yes, dollar's going to weaken. All of this news that's going on right now, we have the press conference taking place in the next 20 minutes or so. I still think that over this next few days, it's going to set us for opportunities to start selling dollar. And again, I will not react until the market goes ahead and confirms it. Which means if I go ahead and take a look at the daily on the New Zealand US dollar, and I'm talking about this one specifically because I spoke about a buy opportunity on the lower time frame. So if I go to this right here, and I look at the daily time frame, and I'm looking at the daily, I'm saying, okay, everything right now tells me that we're bearish, right? You see all these bearish candles right here. We're bearish. Now, if the market stays above that level, then I'm looking for the market to do this and go back up to this trend line. But then I'm looking for the market to go ahead and sell off, right? So I'm thinking about a short-term rally on this pair. Now, I don't want to discount the fact that, yes, we do have this pair on the larger time frame overall bearish, right? There it is there. It's broken out of you can see right here. It's broken out of the support right here. It's traded below it. We're coming back to retest it. It may come short of that and continue to work its way back down south. But as long as that low is holding, I'm anticipating price to come up a little higher before we start heading further down south. So, but at the moment right now, I have to wait for the confirmation. I've got to wait for confirmation, and I don't have it yet. And the reason why I'm not saying this buy is because the market's already gone ahead and confirmed the signal up here at the top. It's too late for me to sell it. Either I was a seller, all right, or I'm staying aside in the market right now. And that's the thing we need to understand. And so right now at this point in time, I'm waiting. I'm waiting for the confirmation. I'm waiting for the setups. I do see that the 1 hour actually does confirm that we're still bearish. So the 1 hour is confirming that we're bearish. I guess we haven't had a change in that signal. That's confirming that we're still bearish. But hold on. Yeah. Oh, okay. So we're bearish, right? I get it. All right. So we're bearish right now. So what I'm looking for right now is this low to hold. I'm waiting for the market to turn around, head back up north. Once it goes in and confirms the bullish signal up here, I'm looking to buy. So I'm at a point where I believe the market's going to go back up again, but I have to wait for the pop prop confirmation before I go ahead and rank. So Chris, I'm pretty much at the moment right now. I do have some positions in on some of the US crosses. I am US weak right now, and if the market does continue to move down south, if we continue to see some strength in the US dollar, this may be just an opportunity for me to be able to add new positions on, and then look for the turnaround. But if it does not hold, and again, we're not done yet, right? The markets are still reacting to the news. We've got the press conference taking place in the next 8 minutes, and if the market continues to do what it needs to, if it continues to be sideways or choppy, the best thing to do is to stand aside and wait for the market to break out.
Yeah, I'm right there with you, man. I mean, I think that what's frustrating is, we want movement, we want confirmation. I think you and I are seeing a very similar setup across the board. And but I'm with you, man. I mean, you can't get ahead of yourself. You can't just throw in a trade and say like, well, I'm just going to start positioning. I mean, look, the honest truth for me for the Aussie dollar is I'll just buy it at the lows. If the New Zealand dollar comes back down to 6,200, I look left on that chart, I'll buy it at the lows. I mean, if euro dollar comes down to the lows, I'll buy it at the lows. So I mean, I'm going to watch this. I mean, I've got the micro price detector up right now, and currently I am in euro dollar short, dollar CAD long, dollar Swiss long, pound dollar short, Aussie dollar short, New Zealand dollar short. So my entire basket based on the micro price detector is favoring dollar strength at this time. I am upside down out of all positions. I'm upside down on all of them except for one. So that just shows how messy this is. I mean, we are looking at the euro dollar on this. I mean, we're 23 minutes in the announcement, and we've seen a move of about 37 pips. I mean, if you look at the daily trading range, by the way, I mean, to put this in perspective here, where's my encapsulation? I mean, this is friggin' FOMC, man, and this thing is only moving 30 pips. I mean, that's pretty pathetic if you ask me. We're at 47 pips on the day. So, I mean, that's the entire day's high to low. To me, that's weak sauce. So, unfortunately, we're not getting, the 1.5 to 2 times daily trading range with a big news announcement like this. But again, I think that this is why we talk it out. This is why we, plan ahead. And this is why we're not really surprised when things start to turn. It might be messy. It might be really difficult to trade the news sometimes, but it is what it is. I mean, price is always right. So, unlike the game show. But I mean, you can't argue with price. It's going to be what we have to trade, and that's how we're going to be profitable. So,
absolutely.
To answer David's question, David's question is, how long will I keep the MPD on? David, I'll probably watch this for the next hour. Gary and I have a meeting to go to after this, and so I'll probably have it on and leave it on maybe till 3:30, 4 o'clock. But that's about it. I mean, I'll watch it and see collectively if I can grab 30, 40, 50 pips. Maybe the end of the day is a big push. Maybe the stock market sells off. Maybe the stock market recovers. I don't know. I literally, the reason I like this script so much is it's designed to eliminate a lot of the noise. It's only going to give a new green box or a new red box if price is closing higher by 10 pips or closing lower by 10 pips. So, I mean, last week we had this on the ECB press conference, and we grabbed 80 pips to the downside, and some traders left it on. And when the euro turned last week, I mean, it was like, I don't know, 100 pips or so on the basket, and then like 250 pips on the basket on the way up. It's just, you never know what you're going to get with volatility. So it doesn't seem like there's a lot of movement right now, but Powell could deliver something. And, who knows? We might see a little sneaky tweet in there today too, to kick the dollar while it's down, or kick the dollar from going too high. Who knows? So there you go. This is from the real Donald Trump. Jay Powell and the Federal Reserve fail again. No guts, no sense, no vision. Terrible communicator. It's like, dude, they telegraphed the rate cut. What more do you want? You want them to cut it to 0% all in one go? Is that the smart move? So anyway, like I said, this was all telegraphed. 25 basis points. They did it just because the market's reacting the other way. It is what it is. But you knew that was going to happen. There's going to be something there to villainize the Fed. So
yeah, Chris, there's just no ways they can go ahead and be so aggressive on the rates. The market doesn't I don't think it is a case where we have to start seeing huge cuts in the Feds right now. As I said,
It's temporary, man.
they
The Fed is totally doing it because they're basically being bullied into doing it. I mean, if you look at all the other central banks, they're all willing to cut rates. They're all backpedaling for normalization. And look, it's the central bank's way of trying to prevent a recession. It's trying to prevent a global slowdown. So the Fed is playing ball. They're doing the same thing. But yeah, I agree. Like, they're not going to be super aggressive. They're going to cut because it's been forecasted, it's been telegraphed, it's been communicated. But you can already see that, okay, we've already cut twice. It's not unanimous. Not all Fed speakers are wanting to cut. So the more contentious it is, the harder it's going to be to have a rate cut again. And I mean, it's almost like things have to turn for the worse for the Fed to say, okay, we'll keep cutting. And so if the market can weather this storm, if the stock market can stabilize and weather this storm, the Fed won't have to cut rates, and we'll see, a higher yield or see a higher market. So I don't know, man. I mean, we can talk about this until we're out of breath, but I don't think anything's going to change on us today. We might get some more movement here for the next couple of hours. I'm already looking ahead to the New Zealand and the Aussie news tonight. I'm looking ahead to the pound tomorrow, and I'll just chalk this up as kind of a disappointing FOMC. That does suck because it's a major announcement, and there was an actual rate cut today, but it just didn't translate into price action that we wanted.
So let me go ahead and wrap up with some of the pairs that I'm going to be looking at,
Sure.
just based on the news that we've just got right here. So if I go to the chart right here, the New Zealand, I'm looking for an early entry point, and I like the SSL on the 8-hour because it gives me the confirmation I need. So I'm looking for a weak dollar. So I'll be looking at the New Zealand US dollar 8-hour time frame, and I'm going to look for a bullish sentiment right here. And if I get the market trading below this level right here, then I'm off the table. I'm not going to look for anything on this particular pair. So this is on New Zealand. Let's go to pound US dollar. Pound US dollar. I did say earlier on that I'm expecting some sort of correction, but I do see still some bullish action to the upside right here. We may get a little push to about 125.60. I know that's about 100 pips from where we're trading right now, but I'm still anticipating an upside move. Now, this could be the decision that it could be the rate decision that comes out tomorrow that could drive it up there on a big spike. I don't know, but I do see technically we got a little bit of movement to the upside. In fact, if I go to the 1-hour chart right here and I compress it, bring it down a little bit, yes, 126. I'm seeing 126 now on this chart right here. So 126, and eventually as I go up to the fifth wave right here, I may look at 127. But that means we're going to have some sort of correction first. So looking for at least 126. I did talk about 125 because that's where I got my target set at. So 125.67. That will be the 100 pip move that I'm looking for right here. I'll be honest with you, traders. If I'm in right now on the pound US dollar, I'm bullish. If I get the market going up and we're 50 pips shy of the target before the news report comes out tomorrow at 7 o'clock, I'm going to be out of the market. I'm not going to wait it around for an extra 50 pips on that trade because we are currently up about 395 pips on this trade alone. And let's see here. There it is, pound US dollar, and drag it over here. 378. Pull back a little bit. So 378 pips on this trade. I'm not really worried about an extra 50 pips if it's going to be that. So I'll probably get out of that trade before the time. And then on the US dollar CAD right here, also something that I'm interested in, and I'm looking to sell this pair. So I'm here right at a second wave retracement. We're in the zone. This is called the sell zone right here. We're in the zone. All I got to look for now is a bearish confirmation. As long as it doesn't trade above that level right there, I'm selling. And this may be a trade that we take over the weekend into next week if it goes ahead and sets up an opportunity in today's trading. We may not. Based on the news, based on how the market's reacting right now, we may not. Now, I've got a different opinion. We may not get a setup this week. All right. And it may only happen next week. And if it happens next week, that's okay. I'm going to be okay with that. All right. So we're going to look for the setup on this. This is the US dollar CAD. And then we've got the last pair I'm going to go ahead and check out is the Euro US dollar. We have seen some weakness out of the Euro. And you can see right here, we're getting a little bit of an upside move. I don't think this is going to be enough to be able to get above this level right here. I don't think we're going to trade above that level. I believe the market's going to still hold short, and we're going to see euro continue to work its way back down south. Now, that would mean that it's strong dollar, right? Strong dollar would mean pushing the euro south. So I'm not thinking strong dollar. I'm thinking weak euro, all right? But now, before I go and commit myself to that, let me first go ahead and take a look at what the daily's telling me here. All right, so and let me explain exactly what I'm referring to right here. I'm expecting a weak euro, but just very short, right? I'm not expecting it to be completely weak. I'm looking for a correction move. And the correction move is where I'm looking to buy in again. So when I talk about euro short, I'm just really saying that I'm looking for an opportunity actually to go ahead and buy long. So I'm looking for a short move in the euro, then a bullish move going long. So which means that I am indeed then looking at US dollar weakness and strong euro. But in the short term, just a quick retracement is what I'm looking for. If I go to the 1 hour time frame and I look at the 1 hour right here, let's see if the opportunity, yeah, there it is. Okay, so this is it here. So this is the big move that we've had right here. Let me go ahead and compress this chart. And so we're actually tied up a little bit in consolidation right here. It's actually, there it is there. We're tied up in the consolidation. We had a little pop out right here, a little pop out there. But we're already tied up inside a consolidation. So this bearish move that I'm referring to, and I want to make sure I'm clear on that because I didn't sound very clear when I first spoke about it. I'm looking for a dip down to retest support down here, and then that point there, at that point I'm going to look then to start looking to buy long. And I'm looking for price to move up to about 111.90, let's call it 112, eventually off to about 112, 112.50. So again, this little bit of bearish move right here, not a problem. But if it gets down to this support level right here, then I want to start looking for bulls to take control of the market. So all in all, traders, right now, no reaction. Just like Chris says, we're not going to really react. There's nothing really fantastic about what's happened now into today's announcement. We do have at 2:30, which is the press conference that's taking place right now. We may see some still volatility in the market, jumping back up and forth. But overall, we should see that price may get us down to the support and then start turning around. If it doesn't, and we have it early, and we start breaking through this resistance, we're on our way towards 111.90 and then on our way to 112.50. And that is pretty much my wrap up, and that's what I think that the market's going to do this afternoon as we head into the weekend. It may be a little cloudy, maybe a bit of rain. No, I'm just kidding. We're going to be heading to the weekend, and then Friday, as Sunday open, Monday, I think things will start materializing. We don't really see a big move unless it's a fundamental driven move. We don't see a lot of trend movements taking place on a Monday and Tuesday. But as we head into Wednesday, Thursday, and Friday, things really start progressing and we start hitting those runs. So I'm going to say that if anything, between now and let's say Wednesday next week, we'll be setting up with great opportunities. And by Friday next week, we should be on a bearish run on the dollar. That's my 2 cents right there, Chris.
Yeah, I couldn't agree more. I mean, I don't think we need to beat the dead horse here. I think that's just a matter of confirmations. That's the secret word of the day is confirmation. You know, a little bit of noise today. Unfortunately, not a lot of volatility, and that's it. You know, I mean, I'm just gonna let this thing run for a little bit longer. Any major headlines coming out of Powell? So, you know, I'd like to see this pace of jobs has eased this year. Job gains have remained solid in recent months. Had expected some slowing. Inflation continues to remain continues to remain too below. That doesn't make any sense, but I guess at or below, whatever it is, 2% objective. And still expects inflation to rise to 2%, sustain expansion of economic activity. Fed is mindful that below target inflation could pull inflation expectations lower. You know, I don't know. I mean, does the market need Fed's reassurance that everything's going to be fine? Does the global economy need the U.S. central bank's reassurance that everything's going to be fine? I don't know. I don't think so. I mean, honestly, traders, if I put this all into summation, the euro dollar, I think Gary is, I mean, look, you can see this chart. If you look at this chart and this has been going down, 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 down. Obviously that can continue. Okay. But at some point we're going to see a pretty exacerbated downtrend, and we're going to see a relief rally. We're going to see something. Maybe it's not all a weaker dollar. Maybe it's a little relief rally. Maybe it is a weaker dollar. That's a possibility, right? I mean, the bigger move with a weaker dollar, that's the possibility. But until this thing is ready to cement a lower dollar, you know, and again, what is it? I mean, now that the Fed's cut rates again, now that the ECB is, I guess, neutral to dovish once again, it's kind of tough to see the euro get the upper hand right now. But we'll find out, right? I mean, at the end of the day, traders, from a technical standpoint, this is still a great trade. And I think that if you're learning anything from this price action right now, it's that every time this thing scores a point, we're getting pullbacks. Scores a point, getting pullbacks. Eventually, this trade will happen. You know, if it comes up to 1,200 or so, we might just go right back down. This might continue on. And Gary, I don't know what your thoughts are, but do we just need to prepare and brace for this and just plan out 12 months from now? You know, like the market, the next big decision cycle is going to be either post-Brexit on the pound, or it's going to be the dollar or the yen after the presidential election in 2020. I mean, I'm not going to be that pessimistic. There's going to be plenty of opportunity out there, but it might not be on the dollar. You know, we might just be putting everything into the dollar basket, wanting the dollar to move so badly, and the reality is just doesn't want to. So that's why the secret word of the day is confirmation, and we'll trade it, and we'll be better off for it. So that's it.
Yeah,
Patience on the dollar. That's all.
The one thing that we've got to really try and avoid, Chris, is jumping in on a trade that that is trying to pick the bottom, right? Those type of trades, trying to pick the bottom trades, we've got to stay out of that. Now, I get it. You know, everyone wants to get at the bottom, right? If you bought a Bitcoin when it's right down there at 40 cents, a Bitcoin, people are making a whole bunch of money when it hit 19,000. But the deal is this: we have to get to a point where we realize that trying to pick the bottoms can create big problems for a lot of traders, because they take so many losses, and by the time the market actually goes ahead and trades north, they're too frightened to get back in that trade because of the losses they've taken already. They're like, no ways, I've been burnt 5 times already on that trade. I'm out of that trade. So I guess the thing is, when you got a pair like that, like the euro US dollar, that's sitting at a point where it looks like it wants to break out, and you're eager to try and jump in that trade, maybe it's just stand aside. Find pairs that are trending nicely. You know, find pairs that are already giving you some good movement and good swings, and focusing on the euro US dollar only when it breaks out. Let's just wait for the confirmation. Let it break out, because listen here, this is the deal. If it does break out, and I don't want to go back to it again, but I'm gonna do it because that's what I do. I go back to things. But if I go back to the chart right here on the weekly, and this is right here, and in fact, we open up the daily. This is better, yeah. If we get the breakout, there is so much money to the upside. There's so much money to the upside. You know, let's stop trying to predict when this market's going to turn to the bottom right here. Now, sure, if you want to add a little few here and just throw in some trades right here and just play around with the bottom right here, that's fine. But don't overcommit to the bottom at the moment right now. Because when we break out, traders, we are heading north. We are heading north. I mean, there's profit to the upside in the range of 500 to 700 pips. So don't be too eager to play around and trying to be the smart guy, right? I'm gonna pick that bottom, because that bottom might cost you 5 or 6 trades, and then by the time it rallies off, then you're too scared to get in, and then you're done.
Right.
So don't go ahead and do that. Now I'm going against what I just said, and I'm actually trying to get to the bottom right here. I'm trying to figure out the bottom, but I'm going to play it with a little bit of money. I'm not going to go ahead and commit myself to that bottom, because if I do want to go ahead and trade that bottom, I want to make sure that my stop is way out the way, so that it keeps me in the trade, and then when it does break out, I'm in the trade and it hasn't spiked me in and out 5 or 6 trades. So that's probably my approach to that trading. But Chris, I'm going to go ahead and close. I'm going to pass it on to you. Guys, I want to just thank everyone for coming out. We're trying a different type of format here. I know it hasn't been quite that smooth in that, but I think we've done a great job getting that done. But we are trying a different format where we've got my charts, Chris's charts. We've got a bit of camera going here. We're trying to make it a little bit more fun and exciting. But most importantly, we want to be serious about our trading, right? Serious about exactly how we're going to trade and how we're going to approach the market, and how we're going to make sure that if the trade's not on, we stand aside. But I really appreciate everyone coming out. If you're not following Chris on YouTube, on his social media, please make sure you go ahead and do so. Chris, you can go ahead and share your information. Me, very easy. Type up in Google FX Big Dog. You should find me on Instagram, YouTube. In fact, if you go to YouTube and you search FX Big Dog, you should be able to find me. Me and Chris are posting a lot of video. We're getting a lot of content out there. I know Chris is getting ready to start pushing out a lot more content. So make sure you guys get connected. We're always talking about different things in the market, setups, whatever it is, we're talking about that. We're posting videos, we're posting some stuff on our social media pages. Get connected with us because we want to connect with you. All right. So with that being said, guys, thanks very much for coming out. I'm going to pass it on to Chris right now. If you can go ahead and take it. Thank you.
All right, thanks, Gary. And I'm just going to wrap up here. You know, I'm staring at a few trades from the micro price detector. All were entry one, so 1, 2, 3, 4, 5, 6. I did not get filled on dollar yen. That's the only one that didn't take a trade. But currently, minus 2.6, plus 5.3, plus 5.1, plus 7, plus 5.4, plus 7. Currently up 27 pips. I mean, now if I want to just say, you know what? I'll take my pips and I'll run with it. I'll let this run maybe a little bit longer to the top of the hour. But, you know, look, it's adding up. You know, at 7, 13, 20, we're up 33 pips, about 30 pips net. It's not great. I didn't do anything other than just, you know, let this script deploy and fumble through it. Now we've got to about 30, 35 pips. So I might just close this and walk away and say, hey, it was fun. We got the tag team. We got to talk to everybody. It was a big room. It was awesome to have a live session. It always is. So I think that's what I'm going to do. Now, of course, everybody that sees this are like, all right, well, why not just put a stop loss in and go to break even? You're absolutely right. I wish I did that every time and let my profits run. But there are some times when I just stare at it, 10, 20, 30, 47. I'm up almost 50 pips right now on the dollar pairs. I'm just going to close it. I don't care. I'm closing. I'm taking my profit. I'm out of here. Okay, so I'm going to close all these up right now, take about 50 pips across the board, and call it a day. You know, there was no risk. There were no losses. The micro price detector took a single entry and stayed in those directions. Does the dollar get that much stronger? Maybe. If it does, fine. You know, but I'm going to go ahead and grab some pips and protect my profit. So as I like
think
to
that's
say,
a smart idea.
What's
That's
that?
Smart idea.
Yeah. Yeah. Plus, I mean, it's not, I don't have to worry about it. But what I want to make sure I do is when I close all these, let me go back into my script and close the script. I've done that before where I close these trades up and I forget to turn my script off and this thing keeps trading. So make sure you turn off these scripts. If you're going to close your trades down and close for profit, make sure you turn these things off. So once I can do that, then I can officially wrap this up. These are done. Everything is off. Everything is stopped. And activity-wise, grabbing some dollars. So I think the euro dollar is the only one that I've closed out essentially at break even. And then everything else was a small win. So it doesn't matter. It was just, hey, but let's grab 30, 40, 50 pips, walk away. I'm happy with that. I always am. Okay. So John says, did you make money on accident? No, it wasn't an accident. I just let it run. You know, I just let the dollar do what it needs to do. Here's your currency strength chart. Let's refresh it one more time. And dollars on top, right? Aussie, New Zealand are down. Aussie, their dollars on top. This will probably run until the top of the hour. I'm still curious what the hour candle is going to look like. But like I said, I'm done trading the dollar stuff. You know, this is just noise in my opinion. If you want to see the dollar index, watch your euro dollar. We'll probably come down here and get to this low. We'll probably come here and score a point. From there, I'm looking to buy it. We could have a squeeze to 112. Watch this little tight area as it's coiling. You know, there's a wedge within this channel. So just be ready for it. That's all. But again, stay in touch with Gary. Stay in touch with me. Tune into our live sessions. Watch the recordings. And, you know, contact us, reach out with any questions. But thanks for being with us today, traders. Have a great Wednesday, rest of the week. We'll see you in the trading rooms, and I'll talk to you soon. Thanks, Gary.
All right. Thank you, Chris.